is to actively solve your money problems. Chapter 2. The 5 Financial IQs. There are 5 basic financial IQs. They are making more money, protecting your money, budgeting your money, leveraging your money, improving your financial information. Financial intelligence versus financial IQ. Most of us know that a person with a mental IQ of 130 is supposedly smarter than a person with an IQ of 95. The same parallels can be drawn with financial IQ. You can be the equivalent of a genius when it comes to academic intelligence, but the equivalent of a moron when it comes to financial intelligence. Often I am asked, what is the difference between financial intelligence and financial IQ? My reply is, financial intelligence is that part of our mental intelligence we use to solve our financial problems. Financial IQ is the measurement of that intelligence. It is how we quantify our financial intelligence. For example, if I earn $100,000 and pay 20% in taxes, I have a higher financial IQ than someone who earns $100,000 and pays 50% in taxes. Financial IQ number 1. Making more money. Most of us have enough financial intelligence to make money. The more money you make, the higher your financial IQ number 1. In other words, a person who earns $1 million a year has a measurably higher financial IQ number 1 than a person who earns $30,000 a year. And if 2 people each make $1 million a year and one pays less in taxes than the other, that person has a higher financial IQ. Financial IQ number 2. Protecting your money. A simple truth is that the world is out to take your money. But not all who take your money are crooks. One of the biggest financial predators of our money is taxes. If a person has a low financial IQ, he or she will pay more in taxes. An example of financial IQ is someone who pays 20% in taxes versus someone who pays 35% in taxes. The person who pays less in taxes has a measurably higher financial IQ. Financial IQ number 3. Budgeting your money. Budgeting your money requires a lot of financial intelligence. Many people earn a lot of money but fail to keep much money simply because they budget poorly. For example, a person who earns and spends $70,000 a year has a lower financial IQ than a person who earns $30,000 and is able to live well on $25,000 and invest $5,000. Being able to live well and still invest, no matter how much you make, requires a high level of financial intelligence. Having a surplus is something you have to actively budget for. Financial IQ number 4. Leveraging your money. After a person budgets a surplus, the next financial challenge is to leverage their surplus of money. While savings and a diversified mutual fund portfolio are a form of leverage, there are better ways to leverage your money. If a person is truthful, he or she has to admit it doesn't require much financial intelligence to save money and invest in mutual funds. You can train a monkey to save money and invest in mutual funds. That is why the returns on those investment vehicles are historically low. Financial IQ number 4 is measured in return on investment. For example, a person who earns 50% on his or her money has a higher financial IQ than someone who earns 5%. One more point. Many people think that higher returns on investment require higher degrees of risk. That is not true. Later in this audiobook, I will explain how I achieve exceptional returns and pay very little, if anything, in taxes, all with very low risk. Financial IQ number 5. Improving your financial information. There is a bit of wisdom that goes, you need to learn to walk before you can run. This is true with financial intelligence. Before people can learn how to earn exceptionally high returns on their money, they need to learn the basics and the fundamentals of financial intelligence. One of the reasons so many people struggle with leveraging their money is because they are taught to turn their money over to financial experts, such as their mutual fund manager. The problem with turning your money over to financial experts is that you fail to learn. fail to increase your financial intelligence, and fail to become your own financial expert. It's easy to increase your financial intelligence if you have a strong foundation of financial information. But if your financial IQ is weak, then new financial information can be confusing and have seemingly little value. One of the benefits of being dedicated to your financial education is that over time you will be better able to grasp more sophisticated financial information, just as mathematicians are able to do complex equations after years of practicing math problems. Personally, I do pretty well when it comes to financial information. After years of study, I can sit in a room and understand most financial concepts. Yet when it comes to technology, I'm a dinosaur. I can barely use a cell phone or turn on a computer. My job in this audiobook is to make financial information as simple as possible. My promise to you is that I write only about things I have done or am currently doing. As you know, there are many teachers and authors who tell you what you should be doing, but don't do what they are advising. Many financial experts do not really know if what they talk or write about actually works. This does not mean I recommend you do exactly what I do, nor does it mean what I do will work for you. I simply want to share with you my experiences, a journey of solving financial problems that continues today. I share with you what I have learned, with the intent that it will assist you in increasing your own financial IQ number 5, improving your financial information. We have other IQs. We are all different. We have different interests and dislikes. We have different strengths and weaknesses. We have different gifts and geniuses. I say this because I do not think financial intelligence is the most important intelligence or the only intelligence. Financial intelligence is simply an intelligence we all need, since we live in a world of money, or to be more exact, currency. As my rich dad said, rich or poor, smart or not smart, we all use money. There are many important types of intelligence, such as medical intelligence. Every time I see my doctor, I am grateful that he dedicated his life to developing his intelligence and his gift. I am also glad I have enough money and insurance to pay for whatever medical challenges I may face. To this, Rich Dad said, "Money is not the most important thing in life, but money does affect everything that is important." When you think about it, money affects our standard of living, health, and education. Studies show that poor people have poorer health, poorer education, and a shorter lifespan. In summary, after 1971, the dollar turned into a currency. In 1974, businesses stopped paying employees a paycheck for life. As a result of these two major changes, financial intelligence became more important than ever. In summary, the 5 financial IQs are: Financial IQ number 1, making more money. Financial IQ number 2, protecting your money. Financial IQ number 3, budgeting your money. Financial IQ number 4, leveraging your money. Financial IQ number 5, improving your financial information. Financial intelligence is the intelligence we use to solve our specific financial problems, and financial IQ measures or quantifies our results. And now, on to financial IQ number 1, making more money. Chapter 3. Financial IQ number 1, making more money. After 4 years at the U.S. Merchant Marine Academy, I graduated in 1969 and got my first job with Standard Oil sailing on their oil tankers. It was a great job with a great company. I only worked for 7 months and then had 5 months off, got to see the world, and the pay was pretty good at approximately $47,000 a year. That's the equivalent of $140,000 today. After only 4 months, I resigned from my high-paying job with Standard Oil and joined the Marine Corps to fight in the Vietnam War. I felt an obligation to serve my country. At the time, many of my friends were doing everything they could to avoid the draft. Many were going on to graduate school. One ran and hid in Canada. For me, going to war and fighting was not the hardest part of my decision. From my naive vantage point, the war actually seemed kind of exciting. I was not concerned about fighting, killing, and possibly being killed. The toughest part of my decision was the pay cut I would have to take. Marine Corps second lieutenants were being paid $2,400 a year. At Standard Oil, I was making that in 2 weeks. 5 years later, with 1 year spent in Vietnam flying helicopters, I was honorably discharged from the Marine Corps. My first and immediate challenge was financial IQ number 1, making more money. I was 27 years old and had 2 great professions to fall back on, one as a ship's officer, the second as a pilot. For a while, I considered returning to Standard Oil and asking for my job back. I liked Standard Oil and I liked San Francisco. I also liked the pay. I would have started at about $60,000 a year, since Standard Oil counted my time in the Marine Corps towards seniority. My second option was to get a job as a pilot with the airlines. Most of my fellow Marine pilots were being offered great jobs with a pretty good starting pay of about $32,000 a year. Although the pay was not as good as Standard Oil, being an airline pilot appealed to me. On top of that, whatever the airlines would pay me had to be better than the $985 a month the Marine Corps was paying me to be a pilot after 5 years of service. Instead of returning to Standard Oil or flying for the airlines, however, I took a job with the Xerox Corporation in downtown Honolulu. My starting pay was $720 a month. Once again, I took a pay cut. My friends and family thought the war had made me crazy. Now you may ask why I would take a job paying only $720 a month in a very expensive city like Honolulu. The answer is found in the theme of this book, Increasing Financial IQ. I took the job with Xerox not for the pay, but to increase my financial intelligence. I decided that the best way for me to earn money was as an entrepreneur. I knew that if I were to become an entrepreneur, I needed sales skills. There was only one problem. I was terribly shy and dreaded rejection. The 4 years I spent working for Xerox, from 1974 to 1978, were very hard. For the first 2 years, I was almost fired a number of times because I couldn't sell, but I had a goal to become the top salesman in the Honolulu branch, and I faced my challenges with determination. After the first 2 years, the sales training and the on-the-street experience began to pay off, and I finally reached my goal of becoming number 1 in sales at the Honolulu branch. I had solved the problem of being shy and hating rejection, and had learned to sell. Even better, I was making a lot more money than I would have as a ship's officer or an airline pilot. If I had just settled into a job after the war, I would never have overcome my fear of rejection and my shyness, and I would never have reaped the rewards of facing those challenges and conquering them. I learned a valuable lesson from my experience at Xerox. Solving the problem was the path to wealth. Once I reached my goal and became number 1 in sales, I resigned to take on my next challenge, building a business. In my previous book, Before You Quit Your Job, I wrote about the process of building my first major business, a business that brought to market the first nylon and Velcro surfer wallets. In that book, I wrote about the 8 components that make up any business, and about how not having all 8 of those business components is the reason why so many businesses fail and remain unprofitable. I believe it's a very important book for anyone who wants to be an entrepreneur and start their own business. In the book, I wrote about how my business went to extreme success in about a year, making me a millionaire, and then failed suddenly. I described the feelings of depression and loss, and a strong desire to run away and hide after the business collapsed. I was deeply in debt and facing the biggest financial problem of my life up to that point. Rich Dad, however, encouraged me to face my problems and rebuild the business instead of running and declaring bankruptcy. He reminded me that solving this messy problem would increase my financial intelligence. It was some of the best advice I've ever received. Rebuilding the wreckage of my business was my business school. The first thing I had to do was put together the 8 parts of my business. The second thing I had to do was redefine my business by finding a competitive niche. You see, by 1981, the year I was rebuilding the business, the market was inundated by other wallet makers. Prices for wallets dropped from $10 at retail, the price I had established, to $1 a wallet on the streets of Waikiki and the world. Nylon wallets had become a commodity, and as you know, the market for commodities goes to the lowest-priced producer. In order to compete as a commodity, I needed a market niche. I needed to become a brand. That opportunity came in the form of rock and roll. As described in Before You Quit Your Job, I stumbled into the rock and roll business and saved my business by licensing the rights to use rock band names on my wallets. Soon, I was producing wallets for Van Halen, Judas Priest, Duran Duran, Iron Maiden, and others. Because I was a legally licensed product, I got my retail price back up to $10 a wallet. Although I now had to pay a royalty to the bands, being a legally licensed rock and roll product opened doors to retailers across America and throughout the world. My business boomed, and money came pouring back in. As I've said, the way to increase one's financial intelligence is by solving the problem in front of you. By 1981, I had solved the problem of rebuilding my business. Then, the next problem appeared: beating my low-priced competitors and the imitators who took my product and were making money while I was losing money. This problem came in the form of pirates. The very people who copied my first product, the original nylon wallet, were now copying my competitive niche. They started producing the same licensed products I was producing, selling at lower prices, only not paying a royalty to the bands. After a few months of fighting the pirates, I realized the only people getting rich were my attorneys. There is a saying that goes, "If you can't beat them, join them." Tired of hemorrhaging money in a losing battle, I fired my attorneys and flew to Korea, Taiwan, and Indonesia to join forces with the pirates. Instead of fighting them in court, which was costing me much more money than I was making, I licensed my competitors to produce my wallets for me. My production costs dropped, my legal fees went down, and I had better factories behind me. I could now do what I did best: sell. Business boomed again. Soon our products were in department stores and at rock concerts. In 1982, a new television channel hit the airwaves, MTV. Our business went through the roof, and once again, money poured in. In January of 1984, I sold my share of the rock and roll nylon wallet business to my two partners. Kim and I left Hawaii and moved to California to start our business education company. I had no idea there would be such a difference between selling a product and selling education. 1985 was the worst year of our lives. Our savings ran out, and soon the problem of not enough money was a major one. I'd been broke before, but Kim hadn't. That she stayed with me is a testament to her character, not my good looks. Yet we worked together and built an international business teaching entrepreneurship and investing with offices in the U.S., Australia, New Zealand, Singapore, and Canada. In 1994, Kim and I sold the business and retired with enough passive income from our real estate investments to support us for the rest of our lives. But we got bored. After our brief retirement, Kim and I produced our board game Cash Flow in 1996, and Rich Dad Poor Dad was released as a self-published book in 1997. In mid-2000, Oprah Winfrey had me on her program for an hour, and the rest is history. Today, the Rich Dad Company is an international business. Much of the success is due to lessons learned from the failures and successes of my previous businesses. If I hadn't learned from solving my problems, I would never have made it this far. If I had thrown in the towel and let circumstances overwhelm me, you wouldn't be listening to this audiobook right now. Every goal has a process. As we all know, every worthwhile goal has a process and takes work. For example, to become a medical doctor, there is a rigorous process of education and training. Many people dream of becoming a doctor, but the process gets in their way. One of the reasons people lack financial IQ number 1, making more money, is because they want the money, but not the process. What many people do not realize is that it's the process that makes them rich, not the money. One of the reasons lottery winners or kids who inherit family wealth are soon broke is because they received the money but did not have to go through the process. Many other people fail to become rich because they value a steady paycheck more than the learning process of becoming financially smarter and richer. They are held back by the fear of being poor. It is this very fear that keeps them from taking the chances and solving the problems required to become rich. At this point, it's important to point out that financial intelligence is also emotional intelligence. Warren Buffett, the world's richest investor, says, "If you cannot control your emotions, you cannot control your money." The same is true for your process. One of the toughest parts of my process was not quitting when I was depressed, not losing my temper when I was frustrated, and to continue to study when I wanted to run. Another reason many people fail in their process is they cannot live without instant gratification. The main reason I mentioned the low pay I received at the start of my life was to illustrate the importance of delayed gratification. Many will sacrifice a richer tomorrow for a few bucks today. I did not make much money in my 20s and 30s, but I make millions today. One of the reasons people do not increase financial IQ number 1 and increase their income is because they stick with what they know. Instead of taking on a new challenge and learning, they play it safe. Now, this doesn't mean you should do stupid and risky things. There are many things we could do but choose not to. My point is that I chose my next challenge carefully, not haphazardly. I asked myself, what will my life be like if I take on this challenge and succeed? It's the same question I ask you to ask yourself. Helen Keller, the subject of the great movie The Miracle Worker, once said, "Life is a daring adventure, or nothing." I agree. In my opinion, one way to increase your financial intelligence, number 1, is to look at life as a learning adventure. For too many people, life is about playing it safe, doing the right things, and choosing job security over life. Your life does not have to be risky or dangerous. Life is about learning, and learning is about adventure. That is why I didn't go back to sailing ships or flying planes, even though I loved both professions. It was time for a new adventure. Intelligence is not about memorizing old answers and avoiding mistakes, behavior our school system defines as intelligent. True intelligence is about learning to solve problems in order to qualify to solve bigger problems. True intelligence is about the joy of learning rather than the fear of failing. One of the reasons I make more money than my classmates who sailed ships or flew planes is because they worked for paychecks. I, on the other hand, wanted to build assets as an entrepreneur and acquire assets as an investor. In other words, if you look at the 4 types of people in the cash flow quadrant, employees and self-employed workers focus on the income column of their financial statement, and big business owners and investors focus on the asset column. One of the hardest things to get across to an employee or the self-employed worker is that a big business owner or investor doesn't work for money. A big business owner or investor technically works for free. Employees and the self-employed work to be paid, and they must be paid before they work. Working for free, possibly for years, is not in their emotional or professional makeup. As a general rule, they do not work to build or acquire assets. In accounting terms, an employee or self-employed works for earned income, and a big business or investor works for passive or portfolio income. In the next chapter on Financial IQ number 2, Protecting Your Money, you will find out why the kind of income a person works for makes a big financial difference. Earned income is the hardest income to protect from financial predators. That is why working for earned income is not the financially smartest thing to do. Many self-employed people do not own a business. They own a job. If self-employed people stop working, their income also stops or declines. By definition, a job is not an asset. Assets put money in your pocket, whether you work or not. Why the rich get richer. One of the reasons the poor and middle class struggle is that they work for money and a steady paycheck. The problem with that is you have to work harder, longer, or charge more to make more money. The problem with physically working harder and longer is that we all have a finite amount of time and energy. One of the reasons why the rich get richer is that every year they work to build or acquire more assets. Adding more assets does not require working harder or longer. In fact, the higher a person's financial IQ, the less he or she works, while acquiring more and better quality assets. You see, assets work for the rich by producing passive income. Every year, Kim and I set goals as to how many new assets we want. We do not set goals to make more money. When Kim first started investing in real estate in 1989, she had a goal of 20 residential properties in 10 years. At the time, it seemed like a major task. She started with a 2-bedroom, 1-bath house in Portland, Oregon. 18 months, not 10 years later, she blew past her goal of 20 properties. After she reached her goal, she sold the units, taking capital gains of over $1 million and upgraded for bigger and better units in Phoenix, Arizona, tax-free. In 2007, her personal goal is to add an additional 500 rental units to her portfolio. She already has over 1,000 units paying her passive income, the least taxed income every month. She makes more money than most men, and she has accomplished all of this as an entrepreneur in the investor quadrant. My focus is to increase my cash flow from business assets and commodities. I invest heavily in oil, gold, and silver companies. As an educational entrepreneur, each time I write a book, I receive income for years in the form of royalties from approximately 50 publishers in different parts of the world. I do not write about this to brag. In fact, I hesitate to disclose our wealth and how we made it. There are people who resent those who make a lot of money. As you will find out in the next chapter on financial predators, it's dangerous to let people know you are rich. One big reason why I risk disclosing what we do and make is because Kim and I are committed to your financial education and increasing your financial IQ. A massive problem with financial education is that most of the people selling or sharing financial education come from the employee and self-employed quadrants. Most are not really rich. Many are journalists who write about money but have little money themselves. Many of these financial experts have retirement plans filled with stocks, bonds, and mutual funds. Many are counting on the stock market for financial survival and will be wiped out if there is a massive market crash during their retirement. Many will struggle if the U.S. dollar continues to decline in purchasing power and inflation takes off. In short, many financial experts handing out financial advice do not know if their retirement plans will work. If they did, many would have retired. Kim and I know our retirement plan works. We know because passive income pours in every month from our assets. We are not putting money in savings, bonds, or mutual funds for the future. If we are wiped out, which is always possible, our real asset will be our financial IQ. We can rebuild again because we focused more on learning rather than earning. We learned to manage our own money rather than turn our money over to a so-called financial expert. People will pay money for you to solve their problems. For example, I will pay money to my doctor to keep me healthy. I pay money to my housekeeper to keep my house tidy. I pay the person who runs a local restaurant for providing great food and a great dining experience. I put money in the offering plate at church to support my spiritual guidance and education. Kim makes a lot of money because she solves a big problem, the problem of quality housing at an affordable price. The more she works to solve that problem, the more money she makes. I work hard to solve the problem of the need for financial education. Simply put, there are trillions of ways to make more money because there are trillions, if not infinite, problems to solve. The question is, which problems do you want to solve? The more problems you solve, the richer Chapter 4. Financial IQ.